Thursday, March 22nd, 2018, Monaco 64, home of alternative economics and contrarian views. So, very interesting day yesterday. Federal Reserve did what was expected. The new chairman, Powell, did his press conference. I actually listened to it a little bit, and I'll talk about what I think, where the Fed is and what's going on with the markets. Before that, though, let's have a look at what the markets are doing this morning. It's 8:45 a.m. London. Yesterday was the markets were fairly mixed right after the Fed decision. The Dow jumped up to like over 220 on the day. Gold traded up to around 1328, and then it turned around back down below just 1320, and then it finished the day at 1335, 33. It made a high of 35 and finished at 33. And it was interesting that all throughout the day before the Fed, gold actually bottomed around 1310 and then just started going up, which is very unusual. A lot of comments from yesterday's videos are saying, oh, you're going to see after the Fed comes in and announces they're going to smash gold. But no, yesterday was unusual. And the stock market actually finished down on the day. The Dow, finished down 45 points. Not much, but it was down after being, it turned almost 300 points lower after the Fed decision and the press conference. S&P finished down 5, and the NASDAQ finished down 20. So it wasn't a great day for the markets. I think the 10-year yield was trading above 290 at that time as well. It is lower now overnight. It's dropped about 3 basis points. Is at around 286 though. So it's still, under control here. The 10 kind of under control, the 10-year yield. So what are we doing this morning? Excuse me. Gold is at 1332. We've had a 1327 to 1335 range. We're going to look at a few charts in a minute. I want to look at the charts of the dollar index, gold, and the Dow. Silver, 1658, up 2 cents. Range has been 1650 to 1662. Excuse me. The Dow future is down 61, 24,618, down 0.25%. It has been down over 100 points. I think the low is 24,523. So 780. Yeah, it was down about 150 earlier overnight. S&P is down 8 or 0.25% as well at 2703. And the NASDAQ is down 34 or 0.5%. Currency-wise as well, the dollar is starting to turn back down. Pound is very strong here, 141.60, up 0.17%. The euro is up kind of the same in percentage terms at 123.57, and the dollar is below 106 against the yen. Dollar is down 0.25% against the yen, 105.77. So let's have a look at some charts here before I talk about what I think are the fundamentals and a little bit about the Fed and the new chairman. If anything will change in terms of what we've seen in the last few years for the dollar and for other assets. First, I'll start with the short-term chart of the dollar index. I've got the 50, 100, and 200-day moving averages. You can see that we've broken now back below the 50-day moving average. It's having a hard time staying above that 50-day moving average, which is the black line. The orange line is the 100 and the green is the 200. So the trend's still down. The key level here seems to be around 89.40. The low today is 89.39. So 89.40 was a low on the 7th of March. The recent long-term low is 88.25, which was the low in the 16th of February. So it looks like we're going to go retest that level. And then I'll show you a longer term chart of the dollar index, just so you have an idea. There's a trend line in that chart there. And that trend line is actually the shoulder of a head and shoulder formation the dollar index has formed since, the end of 2015, so to speak. And the reason I did end of 2015 is that's when the Fed started raising interest rates. I think it was December 15th, 2015. So yeah, the dollar did go down right after that, and then it rose again. And now it's, substantially lower than when the Fed started hiking. It was trading around 98, and now we're around 89. You can see that shoulder line is actually acting as resistance now, which is quite interesting. So that's the dollar. Have a look now at the Dow, actually, at the stock market. Yeah, Dow, yeah, still consolidating after the big the correction we had from the end of January to the 9th of February. 9th of February is still the recent low, hasn't breached that yet. But interestingly, the 100-day moving average here is giving the market some support. It's at 24,684. This is from yesterday. It's not updated for the future, of course. I guess we'd be lower today. We'll have to see what the market does when it opens in New York. So yeah, it still looks not very good. It still looks like a consolidation. As I said before, I think that top on the 26th of January will be the top for a while to come now, and I expect further lows. When it's going to happen is difficult to say. Gold. Yeah, I've made a video maybe a couple of weeks ago, 10 days. I was talking about a flag, how we were ready to break out. I said it could take days or a week or maybe more. You never know with the markets, of course. And yeah, it's taking a little longer, but it looks like now it's trying to really break out of this flag or pennant, whatever you want to call it. Interesting that the 50-day moving average is at 1330.50. So and then you got the trend line as well of this flag. It looks pretty good to me. It looks like the 50-day moving average is starting to turn back up. It was kind of keeling over, and we're comfortably above the 100-day, which again is the orange line, and the 200-day. So looking good, gold. And I think, as I said before, I still think it's going to go higher. As a saving instrument, you shouldn't worry. I have to worry about the price of gold in fiat money. It's an insurance, and you just hold on to it. But yeah, I like to look at the charts, of course. I was in the markets as a broker, and a lot of you do like to look at the charts. Some of you do trade. But it's looking pretty good at the moment. It looks like we're going to have a resolution quite soon. We need to, I would say now, if we can break above 1340 before the end of the week, that would be very, very positive. I guess we are today and tomorrow, so we'll have to wait and see. Cryptocurrencies are still they've stabilized a little bit. Bitcoin hovering around 9,000, a bit above, a bit below. Ethereum 565, so not much change. EOS yesterday made a good move and it's on World Coin Index now. It's like third on the ranking of volume, 815 million traded. There was news yesterday that a big German, how can I say, technology company, FinLab, it's called FinLab, They're listed on the Frankfurt Stock Exchange. They've put $100 million into the Block One, which is the company that is running the EOS project, Block One. So yeah, FinLab, they're involved in financial technology, or fintech as they call. Yeah, and they announced $100 million venture capital investment in EOS projects in Europe. Like people, you know, projects in Europe that are using the EOS blockchain. So that I think that's probably what helped EOS. I think it traded up to 726. That was the high. So that's done quite well. LITECOIN is hovering around 170 as well, a bit below and above that level. So the Federal Reserve, I watched the press conference on Bloomberg.com. They had it live. I also watched the comments before the press conference because the announcement was made at 2 p.m. and then the press conference and Powell just came in at 2:30. So they had half an hour with all the usual, you know, like mainstream economists, mainstream reporters, and they never ask the difficult questions or the hard questions. They just parrot, you know, the bankers, you know, spiel and how can I say, Keynesian economist claptrap. And I was even telling my wife, it's frustrating watching this, but I need to watch it to see what the enemy, so to speak, is saying. But the gist of what I'm getting from these people and the Fed is that they're ready to blame workers and jobs for inflation. And I've said before, you know, inflation is purely a monetary phenomenon. And, you know, the reason prices will rise and wages will rise is not going to be because of people getting more jobs. You know, if people have more jobs, that means the economy is doing well. So why should that be bad? Why should that create a recession? And I got the same idea from Powell. He's on the same hymn sheet, so to speak. Yeah, it seems to me that the Fed, and not surprisingly, because it's a fiat money system, they want to make sure that the dollar is devalued by 2%. You know, they seem to think that not having inflation is a bad thing. You know, it would be great. But the problem is they can't because the fiat money system is a debt-based system, and you need the system to inflate, you know, or else it will collapse. And why 2%? Well, because 2% is just enough so people don't feel it. It's like the frog in the pan. You know, you boil the water. You can't turn the fire too high, or else you will, like, you know, the frog will jump out. And it's the same thing with us. If they create too much of their inflation, things will go awry. So that's what I get from the Fed. I think the dollar still head lower. Gold is gonna head higher. And even though they've raised interest rates 6 times since 2005, the dollar is still in the doldrums. So yeah, if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. Take care.